The controversy surrounding Bitcoin is a topic that has generated a broad debate in the financial and technological sphere. On the one hand, there are those who defend Bitcoin as an innovative and revolutionary decentralized currency, which allows fast, secure transactions without the intervention of intermediaries such as central banks or financial institutions. These advocates argue that Bitcoin offers an alternative to the traditional monetary system, providing financial freedom and empowerment to individuals. However, on the other hand, there is a school of thought that sees Bitcoin as a speculative bubble, with an inflated value and prone to large price fluctuations. Critics point out that Bitcoin lacks tangible backing, such as gold or government-backed fiat currencies, making it vulnerable to volatility and possible sudden collapses. In addition, some argue that its use in illicit activities and lack of proper regulation are reasons to be wary of this cryptocurrency. Welcome back to the channel. This is MoneyDynamo. Make sure to stay until the end of the video where we will talk about whether the future rise in the value of Bitcoin is a sure thing or just a lie. From November 2021 to January 2023, Bitcoin experienced a period of major changes in its value, marking a milestone in its history. In November 2021, Bitcoin reached its all-time high of around $9,000 per Bitcoin, driven by the growing popularity of cryptocurrencies and interest from institutional and retail investors. However, shortly thereafter, Bitcoin experienced a sharp drop in price, falling as much as 78% and trading around $15,500 per Bitcoin. This drop was attributed to several factors, including concerns about regulation and excessive speculation in the cryptocurrency market. However, starting in January 2023, Bitcoin began a remarkable recovery in price. During this period, Bitcoin accumulated a historic rise that took it back to its previous highs. This recovery was driven by several factors, including increased institutional adoption, improved public perception of cryptocurrencies, and the evolving regulatory landscape. The end of interest rate hikes is a relevant factor that has driven Bitcoin's rise in the cryptocurrency market. Interest rates are key tools used by central banks to regulate the economy and control inflation. When interest rates are low, money is cheaper and tends to flow into riskier assets in search of higher yields, such as cryptocurrencies. During a period when central banks raise interest rates, investors may be discouraged from investing in risky assets such as Bitcoin, as safer assets such as bonds offer more attractive yields. However, when central banks halt or reduce their interest rate hike policies, the attractiveness of cryptocurrencies like Bitcoin tends to increase. The end of interest rate hikes can lead to an increase in market liquidity, resulting in greater availability of capital to invest in assets such as Bitcoin. In addition, lower interest rates may raise concerns about inflation and weaken fiat currencies, which may lead investors to seek refuge in alternative assets such as Bitcoin, which is perceived as a store of value in times of economic uncertainty. On the other hand, the adoption of Bitcoin as a haven of value has been a relevant phenomenon that has influenced its price increase. This concept is based on the perception of Bitcoin as a safe asset, capable of maintaining or increasing its value in times of economic uncertainty. Several factors have contributed to this perception. First, Bitcoin's inherent scarcity and predictability are remarkable. With a maximum supply limited to 21 million Bitcoins, its supply is finite and cannot be manipulated by central authorities, making it attractive for hedging against inflation. Bitcoin's decentralization also plays a crucial role. By operating on a decentralized network and not being controlled by any central entity, Bitcoin is resistant to censorship and political manipulation, which increases its trustworthiness as a safe haven for storing value. Bitcoin's institutional adoption has strengthened its position as a safe haven for value. Large companies such as MicroStrategy and Tesla have invested part of their cash reserves in Bitcoin, which has increased confidence in its legitimacy and boosted its acceptance as a sound investment asset. In addition, during economic crises or geopolitical conflicts, Bitcoin has proven to be an attractive option for investors looking for safe haven assets. Its ability to maintain its value in times of volatility has contributed to its perception as a value haven alternative to traditional assets. Another variable in the rise of the Bitcoin price is the approval of Bitcoin ETFs, exchange-traded funds, by the US regulator. Bitcoin ETFs are financial instruments that allow investors to access the Bitcoin market without the need to own the cryptocurrency directly. This approval has generated several positive effects on the cryptocurrency market. First, it has simplified access for investors by providing them with an easier and more convenient way to invest in Bitcoin through the usual broker-dealers. In addition, the availability of Bitcoin ETFs has helped increase market liquidity by attracting a greater number of institutional and retail investors. This has led to increased trading activity and a reduction in price differentials between the various Bitcoin exchanges. Another important aspect is that the approval of Bitcoin ETFs by regulators such as the Securities and Exchange Commission (SEC) has provided greater legitimacy and institutional acceptance of Bitcoin as a financial asset. This has allayed some of the concerns about the legality and regulation of Bitcoin, leading to increased interest from institutional and corporate investors. On the other hand, halving in Bitcoin is a crucial event that occurs approximately every 4 years and has a direct impact on the supply of new Bitcoins. During halving, the reward given to miners for validating transactions and adding new blocks to the blockchain is reduced by half. This reduction is intended to control the issuance of Bitcoins and limit their total supply in the market. The most notable effect of halving is the resulting shortage of new Bitcoins. With a reduction in the issuance rate, there is a decrease in the number of new Bitcoins entering circulation daily. This inherent long-term scarcity has led some investors to view halving as a deflationary event that may increase Bitcoin's value over time. In addition to scarcity, halving can also influence supply and demand in the Bitcoin market. If the demand for Bitcoin remains constant or increases after halving, while the supply of new Bitcoins decreases, the price of Bitcoin is likely to experience an increase due to the decrease in relative supply. Halving can also affect the market's perception of Bitcoin's scarcity and value. As halving approaches, some investors may anticipate an increase in the price of Bitcoin and begin accumulating the cryptocurrency, which may generate upward momentum in the market. This anticipation and speculation can have a significant effect on the Bitcoin price both before and after halving. Regarding the future rise in the value of Bitcoin, there are several possible reasons that could drive future increases in the Bitcoin price. These factors can range from economic fundamentals to technological developments and changes in market perception. First, the growing institutional adoption of Bitcoin could be an important driver of future price rises. As more companies, investment funds and banks begin to view Bitcoin as a legitimate asset and include it in their portfolios, demand for Bitcoin could increase significantly. In addition, the perception of Bitcoin as a safe haven of value in times of economic and geopolitical uncertainty could drive its demand. Inflation, devaluation of fiat currencies, and geopolitical conflicts are factors that could lead investors to seek safe haven alternatives, such as Bitcoin. Another key factor is the reduction in the supply of new Bitcoins due to halving, which occurs approximately every 4 years. This decrease in the rate of issuance of new Bitcoins may increase the scarcity of the cryptocurrency and potentially lead to higher valuation in the market. In addition, technological advances and improvements in Bitcoin's infrastructure could increase its usefulness and attractiveness as an asset. For example, the development of scalability solutions, the integration of Bitcoin into broader payment systems, and improved security and ease of use could boost its adoption and consequently its price. Finally, changes in regulation and the legal framework that favor the adoption and use of Bitcoin could have a positive impact on its price. Greater regulatory clarity and acceptance of Bitcoin by governments could remove barriers to institutional investment and increase the confidence of retail investors. It is important to note that investing in Bitcoin, as with any other financial asset, carries significant risks. It is critical to understand these risks and conduct a thorough analysis before deciding to invest in Bitcoin or any other cryptocurrency. One of the most prominent risks is the extreme volatility of the cryptocurrency market. The price of Bitcoin can experience significant fluctuations in short periods of time, which can result in substantial gains, but also substantial losses. This volatility can be influenced by a wide range of factors, such as news, regulatory events, changes in market demand, and public perception of Bitcoin. In addition, the lack of regulation and oversight in the cryptocurrency market can increase risks for investors. Cryptocurrencies are subject to a constantly evolving regulatory framework in many countries, which may result in sudden changes in market conditions and the legality of Bitcoin investments. Another important risk is the safety and security of funds invested in Bitcoin. Cryptocurrencies are subject to cybersecurity risks, such as hacks, fraud, and theft of funds. Investors should take appropriate precautions to protect their assets, such as using secure wallets and trusted exchange platforms. In addition, the lack of liquidity in the cryptocurrency market can make it difficult to buy and sell Bitcoin at fair prices, especially during periods of high volatility or in underdeveloped markets. Thank you very much for staying until the end of the video, my friend, and if you liked the video, give it a thumbs up and subscribe to make sure you don't miss any of my videos.